Ladies and gentlemen, welcome back to the channel. Today is an anniversary. 36 years ago, Black Monday happened on this day, and someone is saying it could happen again. Yeah, we're gonna go over what they're saying about another potential Black Monday event. We're going to get into what's going on here today with AMC stock. AMC is up 4.69%, $9.59 per share. Give you guys an overall technical update as well as an Ortex update, a option update, and what the data came out looking like today, and what maybe we can expect from Fed Jerome Powell. He should be coming on right about the time you guys are seeing this video. So a lot of things to get into. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So first things first, 36 years ago, today was Black Monday. Stanley Druckenmiller said central banks, not earnings, move markets. Today is the day to pay attention. Critical information for the U.S. trading day. They go on to basically talk about the demise of the Magnificent Seven Fortress. Shares of Tesla are down today on Cybertruck expectations. That's as shares of another of the seven AI stalwarts, Nvidia, has seen a bit of a rough patch lately. A rally from Netflix may save the day for tech. Tesla could be a big determiner for how stocks perform from here, says Simon Ree, founder of Teo of Trading on X. If we see aggressive dip buying in Tesla Thursday, that would be a bullish tell. Conversely, if the market fades the pop in Netflix, that would signal overriding bearish sentiment. It does not look like that is happening today, but the dip in Tesla is definitely not being bought. Tesla is down over 9% today. So 50-50 there, I would say. Now, on that note, and in the thick of earnings season, it's worth reflecting on what widely followed investor and hedge fund manager Stanley Druckenmiller has said about why central banks factor importantly in your investments. He says earnings don't move the overall market. It's the Fed. Focus on central banks and focus on the movement of liquidity. Most people in the market are looking for earnings and conventional measures. It's liquidity that moves markets, Druckenmiller said at the Lost Tree Club in 2015. Note he's expressed wariness on stocks this year, as well as predicting a hard economic landing. Moore believes that some investors are way too caught up in recent data that shows a strong economy. I will not disagree with the analyst that the U.S. economy appears to be running at full steam with no signs of slowing, Moore writes in his latest blog. However, I think they are mistakenly looking at solely economic data and not considering financial conditions. And given post-FOMC meeting moves in asset prices, it's easy to see that the Fed sees the market doing its tightening work for it, he says. The big debate right now, as economic data has been a little too hot, the bond market thinks the Fed will leave chances of a December hike on the table. Murr says nope. The Fed has paused and it will take some serious strong economic data to get the hiking campaign restarted. And he does go on to say kind of how you're just not in a great place as far as the markets, with the conflicts going on, with rates the way they are, with valuations the way they are. You're prone to see some weakness in the markets. And I think that is a given. If you take a look at the charts, actually on the NASDAQ, long term, you have a cup and handle, which is pretty crazy. But if you break down under this, that's where you get into some steeper downside, right? If you break out to the upside, maybe these conflicts end, the war in Ukraine ending, or, the situation in Israel ending, something like that, or the Fed just totally U-turning. Those would be positives, and you would probably get a breakout to the upside. Now, to the point that, Druckenmiller just made, you want to see the Fed ultimately U-turn. That's when you get the big rally. And I don't think you get that big rally probably for a while. The Fed really wants to be higher for longer. They just continuously beat that down. You will have to see the economy somewhat deteriorate quite aggressively before you get any kind of U-turn from the Fed. That's at least what it's looking like. Now, right now, one of the biggest things affecting the market is this Israel conflict. This could give you 20, 30, 40% downside. That's very possible. Because why? This conflict has a direct implication and effect on oil. Oil can affect inflation, right? Smaller increases in oil can affect inflation. A big increase in oil can affect economic activity. So neither one of those is good. But if you were to get a huge rise in oil, because maybe, Iran or Saudi Arabia or one of these other countries wanted to punish the Western world and really restrict the flow of energy. We've talked about this before, but the Strait of Hormuz does control about 20 to 30% of the daily flow of oil tankers. So it's considered an oil choke point. If they wanted to stop that or slow that down, they could. Simple as that. And that would cause dramatic effects in the oil market, which is traded as a global commodity. And again, a slight rise in oil, even going back to maybe where we were before in 2022, that's going to be one of those things where it's not enough to probably push the economy into a deep recession, but it's enough to really affect inflation and push inflation up. On the other hand, if you were to see some extreme actions taken, you could see the price of oil in the $150, $200 a barrel camp, potentially even higher than that if things were to get really bad. And that would cause $10, $15, $20 gallons of gas. That would be an economic disaster. So you're really towing a fine line here. And it looks like things are just not getting better over there. OSINT Defender, for any of this, conflict news, very, very good source, has a lot of sources on the ground. He says the Hamas wing in Lebanon has claimed responsibility for the roughly 30 rockets that have been launched towards northern Israel within the last hour. Parentheses, Hamas is Hezbollah. So not great, right? And it looks like anytime you're going to be getting an incursion from Israel into the Gaza Strip, that's where the situation could escalate, right? It's the actual, invasion itself that poses the escalatory problem there, that people might start getting involved. Other countries might start getting involved. That's really what you want to be watching for as of right now. But until that happens, I don't think any major escalation is going to happen. But again, that could happen at any time. So it's kind of like this really negative catalyst that is just hanging over the markets as of right now. Now, AMC Stock, you're not getting any specific news on the day necessarily that I could find, but you do have Fed Jerome Powell that's going to be speaking here in just a few minutes at noon. So literally, like, by the time you guys are watching this video, he is going to be speaking. What a lot of Fed members have said recently is, we're in a good place. We don't have to raise rates again. Things along those lines. They haven't really been in the camp of we're going to raise rates again, or the probability, or there's a good probability that we could raise rates again. If you look at the odds for a rate hike on November 1st, it's at 5.5%. There's a 94.5% chance the Fed continues to pause. For December, there's a 61.3% chance of a continued pause, a 36.8% chance of a hike, and a 1.9% chance of a double hike. For January, you have roughly similar odds, about 53.7% chance of a hike, 39.8% chance of a 39.8% chance of a hike, 53.7% chance of a hold. So markets right now are not expecting any more action from the Fed. What's interesting here is the markets are actually assigning a 7.5% chance the Fed actually cuts by March. We seen this pushed out until July just recently, right? And still, July is the first time where you actually get the highest probability of a cut. At 35.3%, but the markets have some pretty crazy expectations here. There's a 1% chance that you get 1, 2, 3 rate cuts by June, right? There's a 4% chance you get 2 rate cuts by May, right? There's a 7.5% chance, again, you get a rate cut by March. So expectations are starting to get all over the place, even though the Fed has said higher for longer, right? You guys understand what the Fed has been saying. Fed Jerome Powell, whatever he says today, the markets are going to pay attention to every word. I do believe he's taking questions today. So it's usually the questions that give you the big reaction in the market. So yeah, there is that. This week, as far as earnings, you still do have some companies, WD-40, Intuitive Surgical, Western Alliance, a lot of banks that will be important. But tomorrow, pre-market, you are going to have American Express, and that is pretty much it for this week as far as earnings season. Next week, you're going to get your bigger dogs that do report earnings, your trillion-plus dollar companies. Now, if you look at bond yields, let's see. Let's go ahead and refresh this. 30-year Treasury, not doing much. 10-year Treasury is up about 3 basis points today. Let's take a look at the economic data that came out today. Go ahead and refresh this page. Let's see. So, initial jobless claims came out at 198,000. There is just no rise in initial jobless claims. We were expecting 212,000. Philadelphia Fed Manufacturing Index came in at -9, worse than expectations, expecting -6.4. Philly Fed Business Conditions at 9.2. We didn't have expectations there, but it was still lower than last month, so it's not exactly great. Philly Fed employment came in at 4. Last month was -5.7. Philly Fed new orders came in at 4.4. Last month was -10. Philly Fed prices paid came in at 23.1. So that was probably the most important point, and it actually came in lower than expectations. Existing home sales came in a little bit better than expectations at 3.96 million. Versus the estimate of 3.89 million. Existing home sales month over month came in at -2%. So nothing that's actually too crazy that should be driving yields up the way that they are. I find that very strange that you're actually getting this rise in yields, probably in anticipation of Fed Jerome Powell, and you guys can see that in TLT. It's up 0.35% today. TLT going down means yields are going up. USO is up 0.25% today. The dollar is actually down 0.25% today. And gold is back up 0.36% today. So gold has been the safety asset that has really been getting bought throughout this Israel conflict. Seems like almost every single day gold has been up. Gold has been moving higher. And again, on October 13th, you had the largest single day move higher for gold since the lows of the Rona back in 2020, almost 4 years ago. So there's definitely some money flooding into your risk-free returns or your safety assets at that. Now, let's look at what's going on here on the day with AMC Stock. Again, there's really no news. If you take a look at the option flows, you are seeing a positive order value of 75%, 6 orders totaling $232.92 thousand. So nothing too crazy over here, but it is pretty dang positive if I were to say so myself. If you take a look, you got a short score of 58, $139.69 million worth of short positions. Estimated short interest of free float at 7.71%. Free float out on loan at 11.03%. Shares out on loan 21.81 million. Days to cover 1.18. Cost to borrow 1.57. And utilization of 49.78. If you take a look at the cost to borrow fees, sitting at about 9% for the cost to borrow max, cost to borrow average at 1.25%, cost to borrow minimum at about 1%, 7.72% estimated short interest of free float, and 15.27 million shares that are currently sold short. 7% short interest is a joke, guys. Obviously, there is just no way that the short interest is 7.72%. I got to see the audit on that one because there is just no way, in my opinion. If you take a look at the option activity, as you know, today is Thursday, tomorrow is Friday. That means if you do get a big move higher, you could see something along the same lines as you even seen last week, and you could get that, you know, bigger than not move on a Friday or even a Thursday for that matter. Calls in the money for this Friday, 41,000. Calls out the money, 160,000. Puts in the money, 16,700. Puts out the money, 112,000. So there is a lot of option activity really on both sides here heading into Friday, but especially on the call side. Okay, really on the call side, seeing a lot of option activity, over 200,000 total calls expiring by tomorrow, and a good portion of them are in the money. So if you start to break really above $10 per share, that's where you're going to start seeing a lot of those calls actually make their way into the money, and that's where you could get a much larger move higher. Again, just taking a look here at the $10 strike, you do have 16,000 for open interest, 11,000 for open interest at the 1050. Almost 16,000 for open interest at the 11. At the 1150, you have 5,500, and at the $12 strike, you have 14,000. So a lot of potential shares would need to be bought if you do see AMC stock, you know, make its way higher throughout the rest of the trading day today into tomorrow and start breaking above critical levels, guys. Again, just taking a look at the charts, AMC stock is up about 6% today. You're holding this long-term downtrending line of support. That is good news. You've kind of been basing out after last Friday's 13.64% drop, really for ultimately no reason that was. So you're kind of just basing out. I think it's inevitable. We're going to hit that $14 price. We're going to hit that 50-day moving average. It's only a matter of time. If you take a look at the MACD is trying to go positive here, continuing to trend to the upside. And if you look at the RSI is at 44.85. Around that neutral level, I would say it's neither bullish nor is it bearish. So that is going to go ahead and do it for this video. That's really everything you need to know. That's you know, your day so far in a nutshell. Fed Jerome Powell obviously is going to be important. I will be reporting on that. If there is anything that you need to know, we will keep you informed. Hit the like button and subscribe to the channel if you guys would like to come trade with us live in real time. Link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.